are refined supply and demand zones on the chart where significant buying or selling pressure originated. These zones are critical because they represent areas where institutional traders or large market participants likely entered their positions, driving the market in a specific direction. We identify the first candle that caused a fair value gap area on the chart as the order block zone. This is because we believe the decision behind the strong move originated somewhere within this zone. When the price eventually returns to this area, there's a higher probability it will react. However, this reaction depends on whether unfilled orders still remain within that zone. It's important to note that order blocks don't always work. They aren't guarantees, but rather potential trading areas where price may show predictable behavior. Like any tool in trading, they should be used in combination with other confirmations and strategies to improve their reliability. Finally, we have top-down analysis. This technique is all about combining multiple timeframes to get a complete understanding of the overall market conditions. By analyzing the bigger picture on higher timeframes and then zooming in on the smaller timeframes for finer details, traders can identify the most promising trading opportunities. The process begins with the higher timeframes, such as the daily or weekly charts, to determine the broader trend, key levels, and market sentiment. These larger perspectives help us understand where the market is likely headed. Once the bigger picture is clear, we shift to lower time frames, such as the 4-hour or 1-hour charts, to pinpoint precise entry and exit points using our trading concepts. The important point here is that we never want to overcomplicate our trading, so we're only going to apply the concepts discussed in this video to the charts. Let me show you how. Here, we have the dollar-yen on the daily time frame. In this higher time frame, the only thing we want to mark on the chart is the key supply and demand zones near the current price. At the top, we have the recent high, and at the bottom, we have the recent low on the daily chart. These levels are important because if we zoom into the lower time frames, we'll notice that these prices have been turning points for short-term trends. So, once the price reaches these levels again, we can expect a possible rejection. We can also